week in business today. I've got Anthony and Kingsley again with us, and we're talking about financial things today. Might seem a little bit boring, but I think we might all gain a little bit from today. So, Kingsley, do you want to kick off first?
I can do, in terms of the allusion is to some seminars we did last night that some people came along to. It's first point, I suppose, is around we're approaching the end of the quarter, we're approaching the end of the third quarter. We've got nearly 9 months of this financial year. So you can start to do some financial reports out of your system that are fairly meaningful and useful when you've got 9 months of data. Obviously, a lot of people will be getting ready anyway because they are quarterly BAS people. But it's just to encourage, there's still a large number of people that will do their BAS every quarter, and the fact that they only need to push about 4 other different numbers on their computer system to get a profit and loss out, they still don't do it. In my regard, number one, that's a little bit dangerous even in doing your BAS, because if you haven't really checked your BAS against what the profit and loss says to make sure those two are saying the same story, you are running the risk that you've lodged a incorrect BAS. But it's also just mad that so many people have this wonderful information at their fingertips and they just simply don't look at it, and as a result don't really know how their business is going. So I'd encourage everyone to do that, at least at this quarterly time when you're doing your BAS. Some of you are monthly. If you can do it monthly, even better still. The reports I really like are pretty much every system, your Xeros, your MyObs, your QuickBooks, whichever one you care to name, they all have the ability to do a report where you get months by month. So you've got your July column next to your August column, next to your September column. And I like to print that one off. Even now we'd have 9 columns, obviously, with March. It's very, very useful, even just for accuracy, because you'll spot mistakes very easily. That if you've got an expense category that has $20,000 in it for the year and you've miscoded something for, say, $2,000, that'll be very hard to detect if you're looking at the annual number. But if that's been broken up into months, you'll look and say, crikey, September's twice as much as October. Have I made a blue? It'll jump out at you. So it's great for accuracy. And it's also wonderful for seeing the story of your business through the year and being able to look and say, well, sales was down here and up there and that expense blew out here. And can you explain why that happened? And sometimes there's perfectly good reasons, things beyond your control, nothing you could have done about it. Other times there's, well, there is. And, okay, let's not let that happen again next year or next month. And then the other one I like, and this will be a little bit interesting given the year that we had last year, is I very much like doing the, here, like you could look up your February just been, your February 21 against your February 2020, which is probably the last month you might have where you've not got too much weirdness in it, and say, well, why was February this year lots better or lots worse or whatever than the one before? As we get next month, it could be beyond being worth doing, because March probably for most businesses was horrendous because of the virus. But if we're talking more generally over time, I find that one it might surprise you to hear an accountant say this, but I find that one is more useful than doing your actuals versus your budget. So you want to compare your February 21 against what you budgeted for February. Often it's more useful to go against the actual result from the year before, because that was real. The budget, of course, is your guess. So you can look at it and say, well, I didn't go that great to budget. Is that because you didn't go so good, or is just your guess too ambitious, too optimistic? You've got that problem. Versus this year versus the same time last year is 2 hard data points in reality. And you can what happened last year, what happened this year, and you can be very sure about the reasons. So I do very much like that report as well. So it's that time of year. There's enough data in it for now to make some useful reports.
Sorry, Kingsley, I'm just going to jump in there. I think it's also a really good opportunity when you're doing those comparison reports of when you just have the each month by month to be able to identify where your expenses have gone. And I know this was something you wanted to talk about, Anthony, about identifying those expenses, or overheads as they're sometimes called.
Look, it really is. And the reason for it is that pretty much 12 months to the week to this week, my business, as long as you know, as most businesses did, all of a sudden realised we very quickly needed to get our head around those overheads, and we went down the list of all the vendors and all the people we're paying money to on a regular basis, and went, who can we stop paying money to keep the business operating for whatever period of time we need to. And that was a really useful exercise, and something which put several $1,000s a month back into the bottom line for the business, for my business. And we did it with with a couple of other clients in terms of looking at their marketing expenses, and went through the same thing too. But it's something that 12 months down the track, business is going very, very well. Maybe we're not looking at those. What do I ask Kingsley? Where are some of the, I guess, those hidden expenses that we should all be looking at on a quarterly or even at worst annual basis, rather than letting these things just run away from us?
Well, I suppose the first thing would be, in terms of small business people being very busy, is that sort of concept of the, KPIs, the critical success factors. The first thing I like to get across to people is, in terms of being time poor, in most business, for instance, wages is a very, very large expense, quite possibly the biggest expense, versus, say, stationery. So if you don't have a lot of time, you'll have the situation where your wage bill, if it grows by just a few percentage points, it may have done vastly more damage than your stationery blowing out by 50%. So number one is to look at, they're very obvious. You look at your P&L, you'll soon see where are the big ones. But to be really onto those, because little movements have big effects. So those ones, and then perhaps coming back, again, that would be something you'd be monitoring, say, monthly, versus other littler ones you might only have a look every sort of a quarter. Particularly also too, the little ones might be a lot more lumpy, bumpy. You might have, take stationery. You might have put a stationery order in this month, but you didn't put one in the prior month. So you need a bit of data to see whether that's getting away from you, sort of thing. And again, the other thing, I suppose, going a little bit back to what I was talking about, is most of the reports also coming out of the systems will express it as a percentage. You can get a P&L out that will say, here's all my expenses as a percentage of my sales. And so again, you can compare that. So, crikey, we spent 4% of our sales, let's say stationery again. Last year was only 2%. What's going on there is the staff member that I've got in charge of stationery over ordering because they get a free cap and a drink bottle. Those sorts of lurks that go on, and it enables you to sort of just keep an eye on those sorts of things. So it's still sort of, as a small business person, time poor, I would be focusing on the real big ones, and then intermittently the lilies.
Anthony, where did you find your wins last year when COVID hit us?
Software subscriptions.
Yeah.
As I say, we picked up nearly $1,000 a month in software subscriptions for things that were useful at some point, but not necessarily continued. And there was always a better way of doing things. So we kind of went through those, and each of them may have only individually been $30 or $50 or $80 a month. But when you've kind of gone through the list from the bottom up, which is the opposite to what Kingsley's saying, but I looked at it and I thought, well, there's some things at the top. I'm not going to be able to change my lease, unfortunately, or I'm not going to be able to change my wages, within reason. But from the bottom up, I found some real opportunities going through that and going, no, we don't need that. That one can be put aside. This one here, we don't need to necessarily look at. And we also found the same with a lot of our clients when we sort of spoke to them. Some of them were paying for software for 2 or 3 or 4 years after they'd stopped using it, because it's just an automatic renewal that comes out of their credit card, and each month it got reconciled and it was never really questioned. So that was my own experience. It's certainly looking at the wages side of things makes a heck of a lot of sense. But I guess in a much smaller business where you may only have 2 or 3 staff, then I'm probably more interested in the productivity than the payment. So
yeah. And in a micro business like mine, where it is just me, I definitely am keeping an eye on those subscriptions, because they do just run away from you. When you go, oh, I'll just sign up for that free trial, and you put in your card details, and then, 2 months later you're like, wait, why is that payment coming out? It's definitely an easy win for things is your subscriptions and those small recurring payments. I know big business back in my corporate days, big business loved to focus on stationery. So I found it quite funny that you were talking about stationery then, Kingsley. And when I worked at Suncorp, obviously quite a large business, the first thing they cut out was stationery ordering. So they actually got rid of all those nice little stationery things like tissues and coffee and tea and things like that, and biscuits and stuff, because that was things they provided. But what they found is that it didn't help the productivity, and they did that percentage thing. But they were looking at it on a quarterly basis by each individual business unit and looking at it hard every quarter, going, what is this stationery? What have you bought? What's going out there? So I was fortunate enough to work for quite a senior executive that I knew that was happening. So that is definitely something big business does that maybe small business can pick up on and get amongst as well.
Kingsley, are there benchmarks and ratios that you've got access to that people can look at and work out where they might stand compared to other people in similar industries?
You can access, there is some organisations that will do it. There's an organisation over east that CCH now I think owns the main benchmark outfit, where you can, I'm a liquor store, and I can get the figures for liquor stores, and they are broken up into, even in region versus city, which is good for us, and also the size. So that they'll determined, liquor stores that turn over 2 million versus 4 million versus 5 million, whatever, and you can see yourself against big ones to little ones. And they will also do it, very interestingly, usually on the basis of top performers. So you've got a liquor store, you think, I don't know whether I'm good, bad or otherwise, and they will have isolated out a column of the top performers. So you can say, righto, the people that are really killing it in the liquor store game, they spend 7% of their turnover on rent, and I'm spending 12 or something. So you can compare yourselves against the top operators. Likewise, our very good friends, the Australian Taxation Office, have the benchmarks for many industries. Theirs is not as detailed as what CCH has. So CCH has it broken down to quite fine detail. The tax office ones are broader, and of course their focus is more about trying to detect tax evasion, and particularly people not declaring cash sales. But they obviously do have a big database, and that's still fairly useful. It's pretty broad brush. You'll certainly be able to get it on your gross margin. They'll have it at that for sure, because that's at the real front end of the cash sales evasion sort of issue. But they will have it down to a couple of expense categories typically. The hard part with the CCH benchmarks is, unless your business is a quite common type of business, you'll probably find they don't have them. So if you're fairly obscure, you're probably not going to get them, unfortunately. But if you've got something fairly mainstream, good chance they do, and it is quite detailed. And it is, people sort of focus a little bit on sort of, how bad I am, but I find particularly that going up, putting your numbers up against the top of the WASs is very inspiring. You've got a business that's currently making $100,000, and you find out, someone else doing the same thing I am is making $300,000. So there's real businesses out there making 3 times as much money as I am. They can do it. It's happening. It's real. And to my mind, that's quite, uplifting. Yeah. Rather than say, I'm only a third as good as the top of the WASs. But on the flip side, it does mean, maybe you can make 300. And that's, I think, the way to sort of look at the benchmark ones. So, but you are going to probably have to pay some money to get access to CCH's benchmarks.
Yep. Of course. So, do you have anything else, Anthony, that you wanted to add about overheads while we're talking about them?
Look, I don't, but I did. Kingsley mentioned something earlier on when we were talking about a new focus. There's always new focus in the ATO. They're always looking at various things. What's this one, Kingsley?
This one is, they released a report tail end of last week that on something that they've been, shall we say, sniffing around for a while with, and so this is particularly for people in the services. If you're selling goods, you probably don't have to worry about this one, but in the service industries and professionals and those sorts, they are, what they don't like is a situation where someone, let's say Anthony's got a flourishing marketing consultancy firm, and he is saying that all of his, instead of putting some wage through for himself for the time he's spending in the business, he's putting it all through his profit, and he's splitting his profits off to his wife and his kids. The tax office don't like that, and they only want the part of Anthony's overall income that you'd say is business profits, as opposed to what he's earned from his own physical efforts, to be the bit that can be allocated out in that manner. And they've put out a report with some examples, and this is what they're looking at, and so on and so forth. Fairly complex, but I guess just a heads up to anyone who's watching who is in the service industry, and you've got yourself to a reasonable level of income, and you know you are allocating some profit either to a company or another family member, be careful if you're overdoing that, and you may need to talk to your accountant and make sure you're staying in, shall we say, the safe zone, and you've got commercial logic behind what portion you're allocating. If you're allocating a whole lot, or the vast majority of it, to another family member or fit members or a company, you may be at risk.
So what type of business structures would be able to do that?
Well, so they're looking, you know, it's in your partnerships, possibly your trusts, unit trusts, sort of, and even, but probably not a sole trader, unless to the extent that maybe you're paying a wage to a family member. But wages, technically, the tax law there is the wage has got to be commercial anyway. So if I was a sole practitioner accountant and I decided to pay my wife a $50,000 wage and she was doing no work in my business, I've broken the law, full stop. But so it's more in terms of where, say, us three were accountants in an accounting practice, and you know, we didn't really have many other staff at all, and we were all diverting income off to spouses, they would be keenly interested.
All right, good to know. Well, that's all we've got for today, everyone. Lots of financial things there. We hope you are able to run your profit and loss and do those comparisons. If you are having any trouble running those reports, please reach out to us. We are all fairly well versed in most of the accounting software to be able to guide you in how to run that report, which buttons you need to click. And yeah, we're here to help you. So if you need that help, just reach out. But otherwise, thank you so much, guys. And we'll do it again next week.
See you next week.
Very good. Bye-bye.